Owning a house in Korea seems to be becoming nearly impossible, especially in Seoul, as the National Housing Affordability Index, HAI, reached a record high in the span of 2.5 years. In the last quarter of 2025, the HAI stood at 60.9, 1.3 percentage points higher than in the third quarter, according to the Korea Housing Finance Corporation. The index is an indicator of principal and interest repayment burden when a median-income household purchases a median-priced home using a standard mortgage loan. The latest tally effectively means that people in Korea, on average, are spending 16% of their total income just on covering their mortgage. The tally, however, covers the whole of the country and cannot be seen as reflecting conditions in Seoul and the surrounding Gyeonggi region, which is home to roughly half of the country's 50 million residents. Reflecting this, the Housing Affordability Index for the capital city stood at 165.1 in the last 3 months of 2025, up 9.9 points from the previous quarter. This translates into households spending a whopping 42.4% of their income on mortgage repayments. This marks the highest level in 2.5 years and the sharpest quarterly increase in 3 years. Seoul recorded both the highest index and the largest increase rate nationwide, with no other region exceeding an HAI figure of 100. Experts monitoring the local real estate market have said the future seems more challenging for people wanting to buy a home, as it is likely that the HAI index will rise even more going forward. This is possible as the ongoing standoff in the Middle East is fueling uncertainty and inflationary pressure around the world that will have a knock-on effect on base rates that impact interest payments for ordinary consumers.